Welcome back to Chasing Fi. My name is Melanie, and today I want to talk about one of the main premises of the Build Back Better bill, the piece of legislation that recently passed the House of Representatives. Now, this piece of legislation is now going to move to the Senate, and we'll just have to see what they do with it. It is a piece of legislation that has been referred to as a social infrastructure bill. And whenever I hear about the government planning on spending money, I know what that means. Taxes. I did not read the entire bill, but I did review the section about auditing tax returns of wealthy members of society. The legislation claims that auditing these wealthy people will bring in over $400 billion more dollars in revenue. I personally don't think that that's realistic. This is, of course, my opinion. You should always do your own research, no matter where you find the information. But here's what I think about this component of the bill. If this provision in the Build Back Better bill brings additional revenue from audits, it will not be coming from the wealthy. Wealthy people have access to tax professionals, and since there are so many ways to legally use the tax code to avoid paying additional taxes, there's really no reason to cheat. Consider this. Recently, a report called the Pandora Papers was released. There were government officials, singers, dignitaries, even a figure skater listed in this leaked information. People from around the globe who used tax shelters to shield their money and assets were listed. Now, by the way, all of this was legal. You may have noticed, though, that there weren't many Americans listed in the Pandora Papers, and the richest people in the U.S. weren't included. Why? Well, because the tax code in the U.S. provides plenty of ways for people to shield their money. But the average person is not going to take the time to study the tax code, or they may not even be able to understand it. It's complicated. So they're not going to be able to learn all the deductions they can take or the different ways to protect their money. For example, when I first started working from home back in 2012, I was nervous about taking deductions. I was only working from home part-time, and I was using tax software to prepare my taxes. So the software suggested some tax deductions I could take for working from home. It seemed like you should have been able to take advantage of some of those related to home office, but I was nervous about getting audited, and I didn't take any additional deductions for working from my home. So I'm sure I overpaid taxes that year. If your cousin, good friend, or tax man or woman is preparing your taxes, this is something that I grew up seeing in my neighborhood. People would take their taxes to someone in the neighborhood said they could do them. And they did them. But if that is the case, if you're having someone like that prepare your taxes, you're probably paying more than is necessary. Or the other side of the coin is that there might be innocent mistakes or not so innocent mistakes that cause you to pay less tax than you owe. This will be where the IRS will dig for additional money. The complex tax returns prepared by skilled accounting firms aren't going to be gold mines for auditors. Instead, it will be average people who don't have the money or the time to fight with the government. I'm not going to speculate on how much more money tighter audits of taxes will bring in because, in my opinion, there's really no way to know that kind of information at this point. You can speculate, but why do that? We just don't know. There are too many variables in play to even really come up with a range. However, what I think we can do is consider some of the changes that have taken place in our country over the past couple of years that might throw off the idea that audits will bring in much more tax money. My main question about this provision in the bill was the fact that so many people have moved to a work-from-home model taken into account. Politicians might be stuck in the old mindset that people get up, get dressed, commute to a 9-to-5, a Monday through Friday job, have weekends off, and are employees. This model was interrupted by the pandemic, and for some, they will never be returning to that model again. So what percentage of the population is working from home now, full or part-time? Everyone in this predicament could possibly have tax deductions they can take for using their home for work. This is appropriate and will vary on individual basis. So if you go to someone to get your taxes done and you work from home, they're probably going to ask you some questions about that. And then they'll be able to find deductions that you can take to reduce your tax burden. If you're working from home the IRS has certain deductions that you can take. Of course, you want to make sure that you take them. But my question is the government taking that into account, that there will be some people who they're going to figure that out? I mean, not everybody is going to say, well, I'm going to go get me an accountant and get him to do my taxes, so him or her to do my taxes so that I can find out what deductions I can take from working from home. But there will be a percentage of the population that will do that. And more people are moving to that work from home model. For example, I've worked from home either full or part-time for 7 of the last 10 years. So I took my first remote position in 2012, and then I became full-time in the remote position in 2014, and I worked from home until 2016. But that job was low paying, and it was stressful, so I eventually moved back to a brick and mortar workplace. But once I got there, I realized that this was not for me. It was one of those situations where the grass is always greener. And as soon as I got back into working in a brick and mortar building, I realized all the complications that come with that. I had a long commute. I could not control my environment the way I can at home. Coworkers would come in and talk to me. I would show up early to work, and they would come in and interrupt my planning time to discuss gossip. So once I got back into a physical workplace, I realized I had to get out of it. And eventually, in 2018, I found another job where I could work from home, and I jumped on it. And at that point, I said, you know what? There's no way I'm not going to be working from home. I'm not going to a physical job again. The commute, the stress of dealing with coworkers who may or may not have the same work ethic as you, things like that. I just don't want to deal with it anymore. And there are great tax breaks. In 2020, a lot of people discovered the joys of working from home. Others decided to pick up gig jobs, and still others started businesses. Making an assumption that hiring a super fleet of IRS agents to audit taxes will bring in much more revenue feels a little short-sighted to me. But just in case the auditing gets out of control, you want to make sure you're doing all you can to avoid the situation, because I guarantee that it will be the middle class that has their taxes audited, because they're not going to find what they claim they're looking for in the tax returns of wealthy people. One of the best things we've done is to get an accountant. Of course, this isn't cheap, but he does a fantastic job on our taxes. It's well worth the money. And because we have things like rental property and a business and investments, the tax code works in our favor. Back in the day when I was a teacher, I paid more taxes. Why? Well, for one, I was doing my own taxes, but also I didn't have much in the way of assets or investments. So this is really important. If you want to protect some of your money, you've got to do something more with it than putting it in a bank account. You want to have some assets. You want to make sure that you are contributing to retirement accounts that will give you some tax benefits as well. And also, just remember that the less complicated your tax return is, the more likely you are to get audited, because it's easier for the IRS to dig into your finances. This is not my opinion. This is something that the IRS admitted is the case. They said it's just easier to audit simple tax returns. So I read an article on ProPublica about where most of the audits take place. And if you look at the map, you can see that the majority of audits are taking place in states that generally have a lower overall salary base. People don't make as much money in these states, but that's where they're auditing. And I think that will continue. The tax code is complicated, and people with less money generally do their own taxes, or they use software, or they use some inexpensive tax preparation service that hires people who have a few weeks of training. That means that most poor people are probably paying more in taxes than they should, simply because they don't have the money to hire professionals. On the other hand, if you are paying for tax preparation from a tax professional, you have a much better chance of maximizing your strategy. The tax code provides legal ways to avoid taxes, and everyone is allowed to take advantage of those items if they meet the right criteria. This is why I find it highly speculative to believe that there will be a great windfall from audits. Those who can afford a good accountant probably won't see much of a difference in their tax returns. And those who can't afford professional tax assistants will end up paying more than they should or fighting with the IRS over audits. The new IRS enforcers are supposed to be focused on high earners, but if those people that earn more money are using tax professionals, and those tax professionals identify 100% legal ways to avoid paying more taxes, what happens then? Will there be a decent return on the investment the government plans to make in hiring the new IRS agents? $400 billion is a lot, and the idea that it is going to come from tax dodgers doesn't make sense. Are we sure there are that many tax dodgers? The tax code is written in a way that helps people avoid taxes legally. That's not tax dodging, and there's nothing illegal about it. So are we sure that audits are going to bring in $400 billion? Not everyone thinks that that will be the case. The Congressional Budget Office estimates that the increased tax revenue will be about $120 billion. Their report takes into consideration the fact that the IRS may not be able to find the type of candidates they want to take on these new positions at the IRS. What that means is that they may have to hire people who are less educated about the tax code, which in turn means that more seasoned employees will have to take the time to train the new employees, which reduces the amount of audits the IRS will be able to carry out because those new employees will be in training and the seasoned employees will be doing the training. There's also this idea that increased compliance will be part of this equation. Well, maybe, but increased compliance doesn't necessarily mean more revenue. As I mentioned before, those who don't have seasoned tax professionals completing their taxes are more likely to have mistakes on their tax returns. Some are overpaying. So more audits could uncover the fact that the IRS is taxes than they should be from some people. So what's the verdict here? Honestly, I'm going to say this particular provision is a bit short-sighted, and lawmakers may want to take a step back and look at the country. This might sound good as a talking point for some politicians, but for those who have skilled tax professionals completing their returns and are using legal means to avoid taxes, it doesn't make much sense. So just get a tax professional to do your taxes and things will probably be fine and you won't see much of a difference. So what do you think? Do you feel that the $400 billion in revenue will be found with heavy tax auditing? Let me know in the comments below. Remember to like and subscribe, follow me on Twitter at ChasingFire26, and I will see you soon.